Altria stock, or ticker symbol MO, has been a fan favorite for long-term dividend investors for more years than I have been alive. The over 8% starting dividend yield and a beta of around just 0.6 means the stock should trade somewhat at a boring pace and allow dividend investors like myself to continue to cash off the nice juicy dividend each quarter. But when it comes to ticker symbol MO, there are some obvious risks involved with owning a stock like this. For example, back in 2022, the FDA banned all the Juul lab vape products, which definitely took a hit to MO pretty hard. But in today's video, we are going to do a deep dive into the popular SIN dividend stock and see why the future outlook could be very bright when it comes to Altria, and discover if or if not this stock could offer a current buying opportunity. Now we're going to go through all this and more. Right after you please drop a like in this video and subscribe for more content like this in the future. Now, high-yielding dividend stocks are very appealing to investors for several reasons, but the most obvious reason being that stocks with a higher starting yield offer investors a significant amount of income. With many other stocks and ETFs that have a lower starting dividend yield, it could take years and years for an investor to really start to receive a significant amount of money paid by dividends. But the most important thing to be aware of when investing into higher starting yield dividend stocks or ETFs is to make sure to try and stay away from yield traps. Now, dividend yield traps refer to the investment that may appear to offer a very high dividend, but also comes along with significant risks or the potential for a dividend cut or suspension. These types of dividend investments can be misleading and can trap investors who are primarily focused on chasing higher yields without fully understanding the risks involved. So first, some of the basics when it comes to Altria. The stock is currently trading around $44.75 per share and is up around 934% as far as share price on the all-time chart. Now, the 52-week range for Altria has actually been pretty wide, at 40.35 being the low and 48.99 being the high. But heading over to the Altria website, let's read more about the company and what it has to offer. Now, Altria says our vision is to responsibly lead the transition of adult smokers to a smoke-free future. Our goal remains to balance investments in our future with returning cash to shareholders as we continue to build a smoke-free future. It then says value return to shareholders, a 7.3% adjusted diluted EPS growth, and that's a 5-year time frame. Also very substantial, $30 billion of dividends paid, $6 billion of shares repurchased, and dividend increases on top of that, which we'll go over later, at a 4.4%, which isn't bad at all. Now, Altria is also expected to give another dividend raise very soon here, from 94 cents per share up to 98 cents per share, giving investors another potential 4.3 or 4.4% increase in dividend payout. And because of where Altria is currently trading right now, it is giving dividend investors a nice starting dividend yield of over 8%. But with Altria being a stock that most dividend investors hold on to because, of course, of the nice juicy dividend, the future safety of the dividend is still unknown to some investors. Like this article from Simply Safe Dividends, it says Altria's long-term positioning becomes fuzzier as regulators order Juul's e-cigarettes off U.S. markets. It says that Altria paid $12.8 billion for a 35% stake in Juul just back in 2018. The Marlboro maker made this investment, which has been written down to just $1.6 billion, to gain exposure to allegedly less harmful vaping products that seemed poised to win over a growing number of cigarette smokers. However, Juul has faced increased regulatory scrutiny in recent years as the vaping giant flashy marketing, fruity flavors, and sleek USB device fueled spike in the youth e-cigarette use. Now, to address the concern of this, the FDA banned fruit-flavored vaping products and required all domestic e-cig companies, makers to submit their products for review in order to remain on the market. Regulators primarily wanted to ensure the marketing of these products was appropriate for public health and that their chemicals were less harmful than, of course, cigarette smoke. So even though Altria's core business is cigarettes, and it is cash flowing, the government's efforts to reduce nicotine levels in cigarettes and the constant battle for the e-cigarette space and non-addictive space seems to be a legal nightmare moving forward for Altria. And that being said, Altria could prove to be a value trap if smoking rates begin declining faster than expected. And this is an issue that could be in front of us in the future. If people decide to start smoking less, Altria's business is going to be affected significantly. But even with that being said, Altria's annual revenue is still looking pretty good, and the future estimates for revenue in the next few years is still up and to the right. Now, one of the main reasons why I personally own some Altria in my portfolio, and keep in mind I owned a relatively small amount of Altria, maybe around 100 or so shares throughout my 7-figure portfolio. But the main reason on why I hold Altria is not because I'm looking to get rich off of the share price capital appreciation. It's because the dividend starting yield is extremely high, the underlying business is still cash flowing, and as you see right here, the dividend growth has been consistent over the past several years. And with Altria currently paying as of the last few quarters around 94 cents per share, investors like myself are hoping for a 98 cent or somewhere in that range per share 4-cent dividend increase, which is going to bump up the yield on cost even more. So even though Altria has had some massive hiccups in the last few years, and even though during multiple different time frames the share price appreciation hasn't necessarily been the best, the dividend growth has allowed investors that got into Altria, say right here back in 2010 or even before, to be able to really compound their investment. And now these investors' yield on cost has got to be through the roof. And even though Altria has performed quite well on multiple different time frames, as you see right here, Altria has a 5.4% total return as far as year to date, and this is with dividends included. On the 1-year time frame, 19.65%, 9.97% as far as price return. But if you look a little bit further out and zoom out a bit more, Altria on the 5-year time frame has definitely underperformed the rest of the market by quite a bit. And is this partially due to the big hiccups that the company has been going through as far as the regulatory issues, the whole JEPQ fiasco? Probably partially. But with Altria only returning around 15.4% as far as total return goes, even with a stock that has a massive dividend of around 8% as of right now, that's definitely disappointing to investors that got into Altria around 5 years ago, which is right around the time where I started buying some shares of Altria. So the main thing to focus on moving forward for investors that are buying into Altria is to, of course, ask yourself, are the products that Altria provides going to be products that are going to be around 10, 20, 30, 40 plus years from now? And also definitely ask yourself things like, is the high starting dividend yield going to be somewhat of a dividend trap moving forward? For me personally, like I said a bit ago, I'm holding on to around 100 shares of Altria, which again is a relatively small position in my overall portfolio. But if Altria, for whatever reason, was to dip below $40 per share, I would continue to add more shares because I do like the risk-reward ratio, but only if Altria is in a certain share price. But I want to hear what you guys think down below when it comes to this popular dividend sin stock that many of you that are watching this video probably already own. Is Altria, ticker symbol MO, at these current levels a single stock that you would add to your portfolio? And let us know the reasons why or why not. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks as always for stopping by, and I'll see you in the next one.